Okay. My dear students, hope you had your fill and will be energetic for the rest of the session. Yes, sir. Sharmila, back with your friend. Nice to see you both together. So, we move on to the next topic. Yes. Please look at this. The percentage of demand and supply in terms of weightage was very high. Did you notice that? What we saw? So, what should I focus in this topic? Fundamental question, who gave the law of demand? As usual, that is a proponent. Who gave the law of demand? Very good. Clap for him. We clapped not for the answer, but for giving the name of the new economist. The answer is Alfred Marshall. Let it be law of demand, law of supply. Both Alfred Marshall. Okay. Then, questions on meaning of the term demand in economics. The second one is really difficult because they give you 4 statements on demand and you have to tick mark the correct one. Sometimes the answer is subjective. I was telling Dheeraj the other day. It is a discretion of the examiner to choose. You know, for us the question is, say for example, demand is desire backed by necessary purchasing power. That is one. The other statement is demand refers to the purchasing power of the people and at a particular time, particular place and with a reference to price. We don't find anything like, both are for us equal. So that is a little bit subjective, but otherwise 4 statements will be given on demand. One will be most appropriate. And if it is law of demand, you should have that time, place and prices. Okay, at various prices at a particular place for law of demand. If it is given as law of demand. If it is the demand alone, desire backed by necessary purchasing power. That is one hint or cue we get from the question of this type. See whether it is law of demand and see whether it is demand. Accordingly, the answer will be different. Okay. Now, table and graph based questions. Every year, year after year or batch after batch, it is there. Particularly change in demand and quantity demanded. You will also be seeing an exercise on that. Okay. And the next one is determinants of demand. Please study that segment with case examples because they give you with an example of say pizza or a tea or coffee or a computer software. So they keep giving you the testing you on the determinants. See, determinants of demand, determinants of elasticity of demand, determinants of supply, determinants of elasticity of supply. All 4 examples are important because the question is example based. You have no other option. You have to study with examples. They will directly give you for medicines, for fruits, for necessaries, for luxuries. So it will be typically an example based question. That is what I have entered you here as you are studying it, right? And then coming into concept based questions, what I find is Veblen effect, Giffen effect, demonstration effect, income effect and substitution effect. As concepts, they test you on Veblen, Giffen, income effect, substitution effect and demonstration effect. Sometimes they give you, we have done in the class, demonstration effect and bandwagon effect. You remember, though these are used interchangeably, there is a small difference between them. You remember? Can anybody tell me what is demonstration effect and what is bandwagon effect?
Others have, I also want.
That is?
Demonstration effect is because a particular person has a product, the consumer will want to consume it. Bandwagon effect is because a lot of people have it. The consumer.
Perfect answer. Demonstration effect is, my friend is having, I will have. My neighbor is having, I will have. For me, there is no need. but still I want to have, right? That is demonstration. Bandwagon is, in the market you will find the rate of users increasing. So I find that there is something important in that and I buy it. Can you understand? So however, the textbooks use it interchangeably. If at all you have an option as demonstration and bandwagon separately. So look at the question. If it is one, my friend, my neighbor, that is demonstration, right? For example, advanced countries use certain things which UDCs wants to emulate. That is an example of demonstration effect, right? So remember that. And ceteris paribus, whether it is a Latin phrase or Greek phrase or Spanish or French. What is this phrase? Latin. Yes. And what is the meaning of it?
Other things
remain constant.
Yes, other things remaining constant. Real income versus money income. What do you understand by real versus money income? There is one particular concept you can give me to differentiate real and money. What is that?
Physical goods and services per real, and to money prices, whether inflation or deflation is affected in money.
Are you sure?
Not so.
One concept in economics can be used to differentiate between real income and money income. In income demand, also we did that, and one of the reasons why the demand curve is sloping downwards, where we saw under income effect, what did we see? It was not money income, it was purchasing power. You remember that? The title is income effect, but what we study is not money income. Money not in monetary terms, but the purchasing power, where along with the price, when you study it is real. So real income denotes purchasing power component, unlike money income, which is purely monetary in nature. Right? That is one kind of a discussion which you have to study, because one of the reasons for the demand curve sloping downwards, you have income effect, where you study purchasing power. I think we studied, no, a person going to a shop to buy pen or something, isn't it? And the price of pen went up. That is why he was able to buy more pens. Whereas the money in his hand was the same in first scenario and second scenario. Prices dropped, therefore this time he was able to buy more. So remember, that is one conceptual thing you have to understand. So why does demand curve slope downwards? Exceptions to the law of demand. So why does demand curve slope downwards? What are the major points coming under that? Can anybody recollect and say?
Income effect, substitution effect, multiple.
Very good. Principle of different uses. Exceptions.
Different goods.
Speculation, speculative effect. Inflation, scarcity.
Price dilution.
Price dilution. Right. Inflation, scarcity. Price dilution. Okay. So as you study theory of demand or demand analysis, please, the questions are worded in this way. I mean, they break it into segments and they keep shuffling and giving you, right? So what should I focus in this topic is what is listed out. I can also ask you some questions that. Now, put together theory of demand and elasticity of demand. First of all, definitions or features. Correct and incorrect sentences or statements has been a repeated question. Also difficult because not all the options are, one is correct and others are erroneous. No, they are all very much close to each other. So locating the option is bit difficult. And again, as I said, demand or elasticity of demand, please study the determinants with examples. Change in demand and quantity demanded, as of now, is a 100% sure question, right? Then under elasticity, how should you prepare? Graph, formula, context and case. So I have given as GFC. Look at the graph, see the formula and the title, and some context or case examples are given, whether it is for a luxury or necessaries, it will be given. And in income demand, in the demand curve sloping downwards, income effect and substitution effect is a repeated question. So please note that also. Exceptions, Giffen and Veblen are very important. And in measurement of elasticity of demand, arc method. Using arc method they will give you. If it is not mentioned using arc method, percentage method. I think in our class tests, we've been repeatedly given sums on this, right? If my memory goes right, you have been doing it. If they are mentioned using ARC method, follow that formula. Otherwise, percentage method, right? Now, point method, usual stereotype question. They give you that point graph and midpoint will be ED is equal to 1. Accordingly, here ED 0, ED infinity, greater than 1, less than 1. Repeated question. And total expenditure is a theory question. Who gave this? They don't ask you to calculate it. Only thing is here, the degree of responsiveness of quantity demanded to changes in the expenditure. Isn't it total expenditure? You have that curve and MCQs as given in the material. Okay. Now, please note, numericals are also important for price elasticity, income elasticity, cross elasticity. All the three with the formulas you have to prepare for numericals. I have highlighted numericals is very important, right? Okay. Now points to remember, my dear students. Total expenditure, what is repeatedly asked I have given. Total expenditure method is known as, I'll ask you, total expenditure method, they are one and the same. Total outlay and total expenditure method are one and the same. Now this method was given by Alfred Marshall. Please look at it because we know that we have studied that not all types of elasticity of demand was given by Alfred Marshall. Yes or no? Price alone was given by Alfred Marshall, rest was given by modern economists. And particularly its more specific question, total expenditure method was given by Alfred Marshall. So look at the definition there, small change, degree of responsiveness of quantity demanded to changes in the expenditure. I mean, quantity demanded taken as total expenditure to changes in price. Yeah, please note this, the degree of responsiveness of quantity demanded, here it is taken as total expenditure. We have a column, right? Total expenditure column we work out to changes in price. So in the x-axis, instead of quantity demanded, you will be having total expenditure. Y-axis, you will have price as usual. Right? This is what we should not get confused. So the degree of responsiveness of quantity demanded, here it will be depicted as expenditure. We are not giving in terms of units which is demanded. We convert it into price, we convert into money value and then we calculate that column. You remember that you have total quantity, then price into quantity demanded will be your total expenditure, right? That column, and then accordingly you give your elasticity. So please remember the degree, that definition they will give you 4 statements will be there. Here it is, the degree of responsiveness of total expenditure to changes in price in the place of quantity demanded, right? Now ARC method, that is ARC method measures elasticity between 2 points on a curve. In fact, in our Bharadwaj material, we have that downward sloping demand curve and we show 2 points. It's not at a point, between 2 points, which is ARC method. Okay, and formula I have been repeatedly telling you that please study it in words, though symbolically we can put it, we have to know it in words, and this is very important because numericals always, I have seen, it will be using ARC method or percentage method. So for ARC method, you have to be thorough with the formula, original quantity minus new quantity divided by original quantity plus new quantity. The whole thing divided by original price minus new price divided by original price plus new price. So where is that minus? Where is that plus? What is in the numerator? What is in the denominator? I have heard many students saying that, ma'am, we really got stuck up which is the numerator and denominator, plus and minus sign. And I've always told you, please study it in words because suddenly when you see the numbers, using that symbolic thing is very difficult. Seriously difficult. Okay, so I have given you both in symbols and formula. I want you all to register this. Expected numericals. Calculate price elasticity of demand using ARC method. Calculate price elasticity of demand without mentioning, which means percentage method. Okay. Now go to the next one. Point method is used to measure small changes. My dear students, repeated question. People do not consider this measurement as a theory question. Therefore, they are questioning on theory part. That is why I have given as points to remember. This part literally we will be working out sums, which we also did in tests. But what is the theory part you should not forget is, sometimes they will ask you on this point method is used to measure small changes, whereas arc method is used to measure large change. So which one of the following method is used to measure large changes? They'll give you point method, percentage method, arc method, none of the above, like that. Okay. So please make a note of it very clearly. Which method is used for measuring small change? Which method is used for measuring large change? Point method is for small changes. Arc method is for large changes. Right. Now look at this. Point method was also given by Alfred Marshall. You might have forgotten also now. It's not only total expenditure method, but point method was also given by Alfred Marshall, and it is point method which is called as geometrical method. It is not arc method. I've been telling you in the class, this is one repeated question in the examination. Now these questions are for you to literally register in your mind, because this is a theory based question on a graphical segment, numerical segment. And many times students have said, ma'am, this theory part we never even expected. So please note that in the graphical part, in the numerical part, you can get theory questions. That becomes unexpected for you. So look at it. So point method was given by whom? By Alfred Marshall. It is known as geometrical method. And look at the last point. Negative sign in price elasticity of demand. My dear students, let it be a problem, that is a sum, or let it be theory. Please remember that in case of price elasticity of demand, the answer is always negative, because it shows a inverse relationship between price and quantity demanded. It has more of an economic significance rather than mathematical significance. Am I clear in that? Please note, this is an exclusive point for price elasticity. It is not for income or cross. It is exclusively for price elasticity of demand. And if you get a answer with minus and plus option, your answer will be minus option. If your answer is correct but there is no minus, which means they have dropped the sign and given you the answer. Why? Because price elasticity is always negative. So if the answer is say 0.5 and they have not given minus and plus, they have given only plus, you can tick mark plus, because they will not give it as plus. They are dropping the minus sign and giving you 0.5. It doesn't mean positive. They have dropped the negative sign on an understanding that price elasticity will always be negative. Are you clear about it? So please be careful both in the numerical segment and in the theory part. So have you made a note of all these crucial points? Theory question from a numerical or a graph based segment. Okay. I think you have noted. Can I move to the next slide? So mandatory segment for elasticity of demand and for your demand analysis is this. Definitely identifying the types of elasticity is repeatedly asked. Change in demand versus change in quantity demanded will be asked. Okay, so we can make this as a mandatory question. Okay, mandatory segment. And I think I have added a couple of questions exercise for you, which we can see. Now, can you identify what is the first one and what is the second one?
Movement along demand curve.
Movement along the demand curve is first one. Okay. And would you use the terms increase, decrease, expansion or contraction?
Contraction.
First one is contraction.
This one.
All of you?
Yes.
100% do you agree? Contraction, it's not decrease. Okay. So look at the, now why this graph has been given here, presented to you is, please look at the arrow mark and answer. Okay. The arrow mark is a clue to find out what is the answer. Right. That is one. The second thing, graph tells you
Increase in supply.
increase in
Supply.
both the demand and supply curves are there. Why are you concentrating on supply?
Because no change in.
Yes. So where is the arrow mark given? For supply only. So demand curve can also be there in the same diagram, but the question is on supply. Now what is this? It is increase in supply, not extension, no? Because this is Is this the movement? What is the alternative name?
Shift.
Shift. Okay. So the difference between movement and shift is what? In movement, the change takes place because of what? Changes in prices. And it is based on the assumption of ceteris paribus. Other things remaining constant, price alone influences. You remember that? That is why we call it as movement along the demand curve or supply curve. Both are based on the same logic. Whereas for a shift, all other factors operate except price. It's not along with price. All other factors means prices of the substitute commodities, income of the consumer, population growth, any other factor than price. For that, we use the term shift, which will have increase or decrease. But for movement, you will have expansion and contraction. Are you clear? So this is a direct and misnote question. So please ensure that you study this part very clearly. Now I'll ask you one question. Is it in movement or in shift, price is a passive factor?
In shift, it's a passive.
In shift, it is a passive factor. Such kinds of, you should analyze yourself like this for conceptual understanding, right? So in shift, it is passive because factors other than price are influencing. I think we wrote that points, no, relating to that. It is a passive factor. It will not have any impact on it. Okay. Now do this exercise. A small exercise have been given. A typical demand curve cannot be concave from below, convex from below, rising upward to right, straight line. Second question, when price elasticity is found between 2 points, it is known as arc elasticity, cross elasticity, point elasticity, none of the above. Third one, slope of the demand curve is determined by its own price, factors other than its own price, any of these, none of these. Next one, the cross elasticity of demand for complements is greater than 0, infinity, less than 0, 0. And next one is law of demand is a qualitative statement, quantitative statement, both qualitative and quantitative, neither. So read the question properly, understand and answer. Finished? Think and do. Yes, finished? Yes, seriously? Very good, yeah. You understood all these questions? Were they easy?
Except for one or two questions.
It's okay. So among the five, one or two was a little difficult, huh?
I'm not sure.
Not sure. So not sure, did you attempt it?
Yes.
Why?
I'm sure I attempt.
No. Grand revision is preparation for the examination. If you are not confident, please don't write the answer. Don't get into the habit of tick marking anything and everything. So don't do that inky ponky here because you are the loser. How many of you have just written some answer and you didn't know? Raise your hands. No. So if you don't know, don't touch. Okay. Let me release the answer key. Cannot be rising upward to the right. It cannot be done at all. Any cost. Okay. Second one, between 2 points is arc elasticity. I think we saw just now also that one. Third one is demand is determined by its price. Demand schedule. That's the main thing. And zero. No. For what was the question? For complements, it is negative. Less than 1. No, less than 0. Yeah, less than 0. Answer is less than 0. Please note it is less than 0 because we have seen, isn't it? The curve will be like this. Isn't it? Okay. Law of demand is a qualitative statement. How many of you wrote this correctly? You deserve. Can you tell why you wrote it as qualitative?
It talks the direction, the percentage.
Which means you should have said quantitative, no?
It
Percentage.
does not talk about the percentage, it only talks in the direction.
Okay.
It only talks about the relationship between two qualitative features. So that's why it's qualitative.
Okay. But the main reason is why you call it as qualitative is law of demand is derived from law of DMU, which is a subjective one. That is the main reason. Thank God they are not asking give reason. Choose the correct option and give reason means that's all gone case. The reason is this is what, because it's a psychological theory. DMU is a psychological component, right? Subjective one. We are giving numbers to make to understand, isn't it? My expected satisfaction, isn't it? So when I look at a billboard, I'm tempted. It's worth, I give 100 rupees and buy that. I feel I will get that satisfaction. It's a feeling. Right. So it is called as, many of them market as quantitative. That is why separately I gave you this question, repeated question. Also the question paper setters, the key examiners have given this point. The reason is law of demand is derived from law of DMU, which is subjective in nature. Is that clear? Now,
The gross elasticity less than 1.
you know the diagram, isn't it, for it?
Yes, ma'am.
Less than 0. Negative.
That's what, ma'am.
How? Can I please look at this?
What direction that
Get it. How is the demand curve in that case? Do you see? So this is, let us take it as what? Demand for, we have to see complements, no? We have seen this pen. Okay, price of pen. This is price. May be able to write properly. Why I am not getting it? See, this is a price, okay? And what is this? Here it is quantity. Okay. Now, when the price of pen, fountain pen, goes up from P to P1. Okay. Thank you so much. You're a very good boy. So, when the price of pen goes up, what will happen to quantity demanded of ink? Go down. That is what is it? Negative.
Okay.
0 means what will happen? No, it will be like this. Unrelated goods. Books and clothes or something we saw, no? That is this. Okay, you understood it?
Yes.
So that is what I want to say. Now please do this exercise which I want to give on demand, and every time I have to touch pen, no? Is it like that? I want to give you some. What I should do here? Tell me. Can you help me here? Okay. If it is a I think I should dictate then. Okay, shall I dictate the question? Because I am unable to write. The doctrine of dash was discussed in Veblen effect. Take down that. The doctrine of dash was discussed in Veblen effect. Question number 1. Because you have to tell me the question, we have to discuss the answer. Dash, the doctrine of dash was discussed in Veblen effect. Okay. The snob goods are also known as articles of dash. The snob goods are also known as articles of dash. When the third question is, when the prices of staples go up, quantity demanded does not decline. In bracket, if you want, you can write, rather it increases. This is known as dash effect. This is known as dash effect. Next one, share market is given as an example of how law of demand operates. Share market is given as an example of how law of demand operates. True or false? True or false? When prices are associated with quality, when prices are associated with the quality of the products, it is known as dash. Next one, principle of different uses. Principle of different uses is certainly an example of exception to the law of demand. Exception to the law of demand. Next one, weather condition. Weather condition is not a determinant of demand. Is not a determinant of demand in economics. In economics, true or false? In case of luxuries, price elasticity of demand will be, options are perfectly elastic, perfectly inelastic, relatively elastic, relatively inelastic. Okay, now do these questions. Hope all of you took down the questions, because you have to tell me the questions when we discuss the answers. Read each question, grasp the meaning, write the answer. Okay. As you read the question, please relate it to the segment under which it comes. That was one kind of answering the examination. No? Not just the topic, segment under which it can come is a clue to get very close to the answer. Done? Okay, very fast only. What about you, Krishna?
Yes, ma'am.
Finished, huh?
Yes, finished.
Very good. How many of you finished? Then we can go for answer discussion. Okay, quite a lot. See, I have chapter-wise questions. Will it be useful for you at this juncture if we share it with you? So I think in Google Drive we can upload, no? So that I thought for you need it for business economics or only BCK? For both. Okay. Yes. Now please start. One of you read the question and we will go answer by answer. Note down the answer, which is important. What is the first question? What is the read the question, ma, loudly?
The doctrine of that was discussed in Veblen.
What is the answer? Conspicuous consumption. Repeated question in the examination. If at all there is a question on Veblen effect, please remember conspicuous consumption is asked. And the meaning of conspicuous consumption is something is missing is noted. That is, for example, a big flower vase, a big statue, something like that, some beautiful kind of a decoration. If it is absent, it will be noted. That is the meaning of conspicuous consumption, right? Very rich people do have this, and others. For each people, each segment of the population, whatever is a status symbol, that is coming under conspicuous consumption. What is a status symbol for? Across income brackets, it may be different, but everybody has articles of status symbol. Okay, next question.
These snob goods are also called as articles of
Dash.
ostentation.
Ostentation. Ostentation. Snob goods, articles of ostentation, Veblen goods, conspicuous consumption goods, all are one and the same. Ostentation. Ostentation. Okay, what's the next question?
When you price,
When the prices of staples go up, quantity demanded does not decline, rather it increases. This is known as dash effect.
What is the effect?
Giffen
Giffen effect, isn't it? And remember, in Giffen we use the term inferior goods, and that inferior does not mean really it is of a poor quality or not a requirement, not of that. It is about something which is a routine, which is important, which has no substitutes. It's a daily kind of a routine. And in case of income demand, the inferior goods which we see is about the quality, sort, grade, right? You remember, inferior goods used in income demand is different from inferior goods used in Giffen's paradox, right? Okay, next question.
share market is given as example of how law of demand operates. True or false?
True or false?
False.
Why do you say
Speculative.
false?
Exception.
It's an exception to the law of demand. Okay, good. Next.
When prices are associated with the quality of the products, it is known as
What?
price dilution.
Price dilution, isn't it? Price will be associated. If it is high price, I think good quality. If it is low price, I think it's bad quality. But look at, books. We give the example of books. Same content, same author. It will be available in Odyssey or Landmark bookshop at a high rate. But your hawkers and peddlers will be selling it at a lesser price. So the content is same, the author is the same. So it is our delusion that high prices indicating a higher quality, which is not always true. Okay, next one.
Principle of different uses is certainly an example of exception to the law.
False, because it explains why the demand curve slope downwards. It discusses economics behind the law of demand. Okay, then
Convention is not a determinant of in economics.
yeah, true or false?
False.
False. Weather is certainly one component. Okay, then
In case of luxurious price elasticity,
what?
Relatively elastic.
Relatively
Elastic.
elastic. If perfectly elastic and relatively both are given, please choose relatively elastic, because perfectly elastic is a theoretical construct. So we give a relatively elastic, right? So remember that very clearly. Okay. Not bad here. Yes. Go to the next set of questions. Again, it is a true or false exercise. Look at the set of questions which is asked. Marshall gave all the three types of elasticity of demand. Second, medicines have elastic demand. Third, a small table I've given on income elasticity of demand and whether it is unitary elasticity or zero income elasticity, you have to choose between the two. Arc method is known as geometric method. Point method is used to measure small changes. In case of substitutes, EC is negative. The negative sign in price elasticity has an economic rationale rather than mathematical significance. Please do the true or false exercise. Anybody has got Bharadwaj material today? Yeah, please, can you give it? Have you completed this exercise or still do it? Yeah, please. Completed? Okay. Let's do the answers. Marshall gave all the three types of elasticity of demand. False. Medicines have elastic demand.
False.
False. Are you sure? Yes, it comes under what? Postponement of demand factor, isn't it? If a doctor prescribes medicines, we have to take it. If he prescribes some fruits and all, you can postpone it, right? So this is inelastic medicines are. Now look at the income and the table. Is it unitary or zero income elasticity? Zero. Why do you say zero? No change in quantity demanded. See, it doesn't mean that you should have 0 there, 10 and 0, no. If it is unitary elasticity of demand, what will be the number there? 20. In proportion to the change in the income, quantity demanded will undergo a change, right? So you will have 20 if it was unitary elasticity of demand, right? Can you follow that point? Yes. Arc method is known as geometric method. True or false? False. Point method is used to measure small changes. True. In case of substitutes, EC is negative.
False.
False. So it's positive. Negative sign in price elasticity has an economic rationale rather than mathematical significance. Read properly the sentence. Two different answers are coming. True. True is the answer without any doubt. Okay. Now take the next set of questions. Okay. In maths, can you drop the sign? So here we are talking about why that negative sign is the inverse relationship between price and quantity demanded. Okay, take down the next set of questions. First one. Single-use goods will have less elastic demand as compared to multi-use goods. Single-use goods will have less elastic demand as compared to multi-use goods. All this will be true or false. Okay, true or false. You have to write. Second one, wheat is an example of wheat, WHEAT. That is, we are talking about a demand only. Wheat is an example of inelastic demand. True or false? Inelastic demand, true or false? Third one, in case of addiction, it is elastic demand. In case of addiction, it is elastic demand. Next one, when the prices are at a very low range, when the prices are at a very low range, it is a case of inelastic demand. It is a case of inelastic demand. Okay. Negative income elasticity of demand relates to luxury goods. True or false? Negative income elasticity of demand relates to luxury goods. True or false? Write the formula for cross elasticity of demand. Write the formula for cross elasticity of demand. When will the cross elasticity be greater than 0? That is EC greater than 0. Cross elasticity, that is, when will EC be greater than 0? Write the formula for percentage method. Percentage method. When a consumer spends a small amount on a particular commodity, the demand for it will be inelastic. The demand for it will be inelastic. True or false? Okay, please do these questions. See, these questions will strengthen your conceptual understanding. The whole grand revision in business economics is about your conceptual knowledge, in-depth knowledge of various concepts and laws which are studied in economics. Right? Once you are clear in that, addressing an example would be very easy. Example based question. Finished? Yes, all of you? Good. 1 minute you want? Krishna, you finished?
Yes.
All of you at the back? Yeah, have done? That side, all of you are finished? Okay, let's start now. So what was the first question given to you? Single-use goods will have less elastic demand as compared to multi-use goods. True or false? True, isn't it? Because multi-use goods, what will happen? You can compromise on one for the other. Here it is not. That option is not there. Okay, so the answer is true. What's the second question?
Inelastic demand.
Which one?
Wheat is an example of inelastic demand.
True or false?
True.
True. Why? Because wheat comes under
Necessary.
necessaries. Good. Third one. What was the third question?
Case of addiction, it is elastic.
Elastic demand.
In case of addiction, it is elastic demand.
False.
False. Because addiction is one which you cannot come out of it. Right. Okay. Next one.
When prices are very low, it is a case of inelastic demand.
Prices are very low. Yeah. Low in range. It is a case of inelastic demand. True or false?
True.
False.
True. Middle range.
Only for middle range it will be elastic. Very high, very low, it will be inelastic. No change. Very high, I am not even going to be bothered. Very low, for me it is very low. I don't mind any change, right? We studied in the class, I think, with an example of car prices and pen drive or something which is lesser in thing. For moderate goods only, it will be elastic. Okay. What is the next one? Income.
Relates to luxury goods.
Negative income elasticity of demand relates to luxury goods. True or false?
False.
False. Huh?
False.
Why?
Because if income increases, we buy more and more luxury goods. So there is a positive relationship between income and
Okay, so negative income elasticity of demand then relates to which goods?
inferior.
Inferior goods. Repeated question in the examination. Negative income elasticity of demand relates to, it is here where we talk that inferior means quality, sort, variety, grade. First sort, second sort, third sort we saw, no? That is the one coming here. This is not your given inferior goods. Make a clear-cut distinction between inferior goods discussed under income demand, inferior goods discussed under given paradox. Under given it is staple, your routine which is called as inferior. Under income demand it is second quality or third quality which is called as inferior. Okay, what is the next question?
Formula of
Cross elasticity of demand.
Yes.
What is that?
Delta Q of X by
Okay. Please tell. What is the answer?
change in quantity of X by
Change in the price of Y.
Y.
Two different commodities, right? A and B or X and Y. Right. Next.
When will the crop elasticity of demand greater than zero?
Greater than zero. Substitutes. They can also ask you like this, right? Greater than zero, less than zero, or for necessaries, luxuries. They can ask. Okay. Next one.
For percentage.
What is the formula?
Delta Q by delta P.
Yeah. Delta Q by Q divided by delta P by P, which you can multiply and do it. Okay. Next one.
Small amount for a particular commodity, the demand for it is inelastic.
Small amount, the demand for it is inelastic. True or false? Yes. That's all. It's the last question. Okay. Now I am going to give you a sum to work out, right? Please work out this problem. Take down this problem. The price of 1 kg of coffee is 60 rupees. The price of 1 kg of coffee is rupees 60. At this price, 10 kgs of coffee is demanded. At this price, 10 kgs of coffee is demanded. If the price of tea rises, if the price of tea rises from 50 rupees to 70 rupees per kg, the quantity demanded of coffee rises from 10 kgs to 16 kgs. Calculate cross elasticity of demand. I repeat the problem. The price of 1 kg of coffee is rupees 60. At this price, 10 kgs of coffee is demanded. If the price of tea rises from 50 to 70 per kg, the quantity demanded of coffee rises from 10 kgs to 16 kgs. Calculate cross elasticity of demand. Price of coffee, quantity demanded of coffee increases from 10 to 16 kgs. Work out the problem. Yes, finished, huh? That's why I made you tell the cross elasticity of demand formula, no? Change in quantity demanded of commodity X by change in the price of commodity Y. Wait a minute. You must give me the answer with a suitable sign. Answer with a suitable sign. My dear students, in cross elasticity of demand, what is the first step you would do? Which will come in the numerator, which will come in the denominator. Where there are two different quantities, it will come in that product will come in the numerator. Where there are two different prices, that commodity will come in the denominator. Right? Have you all calculated? Some of them are still calculating. We'll give time. Yes, Balasubramaniam, did you calculate? Where are you doing the calculation? Finished. How many of you still doing? We'll give you time because it's a problem. All of you completed? Okay, what is the answer?
Plus 1.5.
Plus 1.5. Why is it plus? Because we are discussing with substitutes. Okay, plus 1.5. Okay. Okay. Okay, I'll give you one sum on arc method. Please take down the sum. If the Pizza Hut raises the price of a medium pizza from 60 rupees to 100 rupees. Is it an imaginary sum or really it will cost this much only? Maybe you are all pizza lovers, no? Many of them. So the medium pizza from 60 to 100 rupees and quantity demanded and quantity demanded falls from 700 pizzas to 100 pizzas. 700 to 100. Calculate price elasticity using ARC method. Calculate price elasticity using ARC method. Yes, completed. Some of them are still working out, I suppose. What is the answer you got?
Minus 3.
Good. Now in the examination, if there is a 3 without minus sign, only that is 3 is given, and others are other numbers, please tick mark the 3, because it means they have dropped the sign on an understanding that always price elasticity will be negative. That's what repeated, because the options given are in this paper, say 0.67, 1.5, 2 and 3. So 3 is the correct answer. Got it?
They give 3 and minus 3, you have to do like
Minus 3. Minus 3. Yeah. Okay. Now we'll do some theoretical discussions. So in cross demand, please be very careful, because it's not only about EC greater than, less than and equal to, it is also about the calculation which you do. So that is why I gave you that. Now, one important point which the students have to know is demand and supply have two different perspectives. In the class, I have repeatedly stated that a consumer's perspective is radically different from a producer's perspective. Yes or no? Because a producer wants high price as profit is his goal, to which a consumer is against. Deadly against a rise in price, right? So when you address a particular case example, see whether it is a question from the supplier's perspective or the consumer's perspective. Otherwise, your answer will be wrong. I want to give you this glimpse and then only do the exercise for this. Please be very, very careful about it. So, always for supply, high price is favorable, profit driven, consumer is need driven. Okay, that is why classification of goods will be essential and luxury for a consumer, but for a producer it will be perishable and durable. He won't give us necessary and luxury. For him it is immaterial whether it is a necessary or luxury to you. As long as it gives him profits, he will be doing that business. Can you understand this point clearly? So I am very, very clear in telling you that as you're doing a case example, please note whether it is consumer related or producer related. Right. Now regarding supply, my dear students, the concept of supply itself, on the concept itself you have repeated questions. What does supply mean in economics? I think the exercise which we did in the class, we began, what is this? It refers to dead inventory. It refers to unsold stock. It refers to quantity sold. You remember all these? True or false statement. So please make a note of that. Supply as a concept is in economics is very, very important. Now, by the way, what does supply mean in economics? It implies offer for sale. No, it need not be sold. It is not the quantity sold. It is not an unsold inventory. It is only offer for sale. That's all. Supply is just an offer. When you find the term offer, it is supply in economics. We are not talking about inventory. We are not talking about total stock of goods in existence. We are not talking about goods which are sold. Nothing. Offer for sale at a particular place, etc. So the producer is willing and able to offer this good at these prices in the market for sale. Okay, remember that. And again, you have determinants of supply, which will be a case example, case related. I will give a few exercise on that. Law of supply. Law of supply itself, 4 statements on law of supply will be there, and you have to choose the correct one, right? Who gave the law of supply? Okay. Now, exceptions to the law of supply is newly added. Earlier, we had only exceptions to the law of demand, but after some time onwards, exceptions to the law of supply is also being asked in the examination. You remember that we did separately a list of points which are defined exceptions to the law of supply. Then, of course, elasticity of supply with the formula, and in elasticity, here you have only percentage method and arc method. For supply, you have for price elasticity of supply, percentage method and arc method alone. So far, we have not found anything else in the examination. Okay. So look at the supply schedule and look at the supply curve sloping upwards. So it is only telling you that how higher price is a favorable one for the supplier. He is after profits. So supply curve will always be sloping upward. So in your exceptions, you will have downward sloping supply curve. In your exceptions, you will have downward sloping supply curve. Okay. So this much of knowledge you must have. And now I will question you something. Please take down this determinants of supply, which is a favorite question of the examiner to ask in a tricky way. So I expect all of you note it down. It's like a refresher for you. Determinants of supply. Remember, determinants of demand, determinants of elasticity of demand are easy than determinants of supply or elasticity of supply. Please note down this: price of goods, price of related goods, government policy, number of sellers, nature of the competition, future price expectation, seasonal factors, technological advancements, inputs and infrastructure, cost of production. Please take down these points. After taking it down, you will take down the exercise questions I'm going to give. Okay. One observation which I've seen during the past batches is they don't focus on supply as much as they focus on demand. Sometimes completely demand is sidelined, and whatever they wanted to question on demand, they will question on supply. So please be prepared for determinants of supply, determinants of elasticity of supply, including the graphical segment. This is one important point I want to tell you. After you take it down, I will give you one exercise based on this. Have you taken down all these factors now? Neeraj, whoever you are, don't go through the notes, running notes. I want to test you. No check, because I am going to give you one exercise based on this. I want to see whether you remember and how close are you with the subject. I have my own hunch regarding your preparation and touch with the subject. I have my own hunch. and I'm 100% confident of my hunch. But let me see how you break it or live up to it. Okay, have you all taken down? Okay, below you can take down this exercise. When the price of good in question, when the price of good in question falls, F-A-L-L-S, falls, supply will be more. Okay, all this will be true or false, right? First question. When the price of goods falls, supply will be more. Question 1. Second, favorite question of the examiner. When the price of related goods falls, supply will be more. When the price of related goods falls, supply will be more. Supply will be more. Third, when taxes are raised, supplier rises the price. Supplier rises the price. In a perfectly competitive market, supply is less than an oligopoly market. Supply is less than an oligopoly market. When the prices are expected to fall in the future, supply also falls. When an expensive technology is found in the market, the supplier does not opt for it. A rise in the cost of production lowers the supply in the market. A rise in the cost of production lowers the supply in the market. Answer all these questions, after which I'll give you a 5 minutes break. I can read your face. I know mind reading. Point by point, go through it, answer it properly. Completed, huh? Very good, yeah. Mastered supply analysis, huh? All are correct. All will be correct, huh? To your knowledge.
Yes.
I think the fact that break will be announced after it motivated him, I think. Just like a flash of lightning, he did it. How many of you completed? The others. Others? Still questions are there? What about you? Completed? Yeah. Yes, let's start. What is the question one? One of you read the question one. Now, my dear students, one point you have to notice, whenever they are saying supply, it means current supply. Okay, that is one point you have to have in mind. And it is the supply of the goods in question. In question means what? Whatever commodity we are talking about, the price of it, the same commodity is quantity. Note those two. I think I clarified in the class. Goods in question is different from related goods. Goods in question is the price of the commodity about which you are talking. That commodity is quantity you're discussing, right? That is good in question. They'll give you like that. That's a phrase. Okay, first one, correct answer. Second one, what is the question?
When the price of related good decreases, supply will increase.
Why?
The other, on the related good decreases the price, so the supply will increase. Other suppliers will also reduce this one.
For example, there are two goods, X and Y related goods.
Ah,
So suppose.
tell like him. Okay, X and Y are two goods. Okay, related
suppose,
goods.
X's prices decreases,
Hmm.
then the producers who produce X good and the Y's price is constant. Let us assume. Okay. The producers will shift.
What is the
from
question? Read the question.
No,
Completely.
X price reduces,
Ah.
they will shift from X to Y and Y's supply increases. So it is
Read the question.
price of related goods.
When the price of related goods falls, supply will be more is given. Huh?
Will be more.
Yes.
So it is a true statement. Because I have no incentive to switch over from the current good to the other. You have to say like switching over will not happen because no incentive. Supposing that was fetching me an attractive price, what will I do? Switch over. Right? Okay. Third one. Taxes are raised. You remember taxes and subsidies together. It's a repeated question. So in which case supply will fall, in which case supply will be more.
When subsidies are given, supply will increase,
Hmm.
and when taxes are increased, supply will reduce.
Yeah. So remember that the subsidy will be an incentive for the producer to supply more. Whereas taxes, see, some people understand that taxes will raise the price of the commodity and therefore he would want to it. No, tax is a burden. Subsidy is an incentive. Right? Because if the prices are going to increase, no consumer is going to come and buy it, right? So please remember, tax is a burden. Disincentive, subsidy is an incentive. Repeated question. That's why I'm asking you this. So I hope you have noted it down clearly. So tax is a disincentive, subsidy is an incentive. Then next question is
In a perfectly competitive market, supply is less than an oligopoly.
true or false?
False.
Why? Why?
Large.
Yeah, large number of sellers. Here it is few sellers. Okay. Future price expectations. What is that question?
When the price
Prices are expected to be
increased in future,
supply also.
What is that?
False.
Yes, because here the current supply will go up. Since in the future it's going to be low, now itself I will sell it off. Okay. Then, if expensive technology is there, will the supplier take it or not?
take it.
Take it. That expensive should not be considered because technological advancement is always generating more supply for you. It's an incentive only. Right. last question, no? Yes, true. Increase in cost of production is a disincentive. Okay, please remember that very, very carefully. Is that clear? Okay. So remember this common question from the supply segment, two commodities, related goods, switching over. Please remember that point very well. Taxes and subsidies, repeated question in the examination. Which is an incentive, which is a disincentive. You have to know. Now tell me what is meant by subsidy. You remember the definition of subsidy which we did in class?
Government take production.
Takes product in production.
Cost of production.
Government participates in the financial burden of the producer or the cost burden of the producer. Some ratios will be worked out. If the supplier is going to bear 75, 25 will be borne by the government. Is that clear? So remember that. I think most of you are anxiously waiting for what? Yeah. Now we can begin with more exercises on supply and elasticity of supply. Okay, are you ready for that also?